Wednesday, July 26, 2023, Maneco 64, home of alternative economics and contrarian views. So I do look at most of your comments, and today I'm going to hopefully answer and clarify a point that I made a few days ago, and there was a question in the comment section, and it said, what do you mean inflation is a deliberate policy? So that's what we're going to look at today, why inflation is a deliberate government policy. And of course, you won't hear that in the mainstream press, be it financial or business press or other kind of general media, because they don't want people to know that. And it is also represents a division between the Keynesian and monetarist school and the Austrian school of economics. And I'm going to try to use an analogy for that. Before I start, though, let's look at some interesting and important headlines, in my opinion. Those of you who are not in the UK might not have heard about this, but the CEO of NatWest Bank, which is the bank that closed Nigel Farage's account, they own Coutts, the bank that closed his account for political reasons. She's resigned overnight as CEO, and I think she should have been sacked by the board, of course. And it was found out from herself yesterday. She came out and she admitted that she not only disclosed information about a client, i.e. Nigel Farage, but she also disclosed false information about him. So I have an account with NatWest. Am I closing this account? Not really, because all the other banks here in the UK, you can't really trust them. And that's why I've been saying for years that you need to stop dealing as much as possible with these banks. And what does that mean? Well, that means holding a minimum amount so that you can function, pay your bills. Maybe you might have to hold some extra depending whether you're self-employed and you have a tax bill. And that's what I do. And it's one of the reasons why I've been accumulating, trying to accumulate gold and silver over the last 20 years, because I've known about the banking system and how fraudulent and fragile it is for over 20 years. Since I started looking into the monetary system, since I bought my first gold coins. And talking about gold coins, just to let you know that Gold Investments in the UK still has the deal for 1 ounce gold Krugerrands. Yes, only 1% over spot. You get it for 0.5%. Oliver also told me that they're going to soon get the new Britannias and new Sovereigns. It should be in by next week. If you're interested. And of course, in North America, I have my affiliates, ITM Trading and Miles Franklin. All the details are below in the description. So I thought that was very interesting. When I started out in the business in finance in Switzerland, I was employed by a small private bank. In Geneva, they call it a fiduciaire. Which is, like a fiduciary, but small private bank. And I remember signing my contract, and my bosses were very clear to me about the Swiss not secrecy, but privacy laws. And you shouldn't, this is what it's about. It's about privacy, not just the fact that they closed his account for his political reasons. That's bad too. But also it's all about privacy. And that's why we need to keep exposing this agenda of central bank digital currencies, of the globalist agenda. And just to let you know, yesterday I found this website, Wide Awake clothing and I bought this hoodie. Why did I buy a hoodie, not a t-shirt? Well, because here in England, t-shirts are not worn very regularly because it doesn't get very hot. A hoodie is a much better thing to have, I would say. But I thought it was really interesting. There's lots of other like statements, and it's called Wide Awake Clothing. If you're interested, there's a link below in the description. There are t-shirts and other things as well. What's the other news I wanted to talk about? Well, it's kind of related to what we're going to cover soon about inflation being a deliberate policy. It's something that came out yesterday in the FT. UK government faces a £150 billion bill to cover Bank of England's QE losses. So this is just another example of how the bankers always win and the taxpayer always loses. Yes, it's not the government that faces that bill. It's us, the taxpayer. We're going to pay it through our taxes and through a currency that's debased through inflation. So with that, let's go to inflation. And the question was, what do you mean? What are you talking about? How come it's a deliberate policy, government policy? Well, I'm going to start with what money really is. And I'm going to recommend a book that I've recommended many times, very easy to read, that will explain to you much better what it is. But I'm just going to give you my brief summary of what money is. Basically, if you go back in time to primitive societies or primitive human existence, people used to hunt and gather, and then eventually people started bartering, exchanging things, and then people started living more together in a tribe or a small village. And yes, they realized that a lot of times you couldn't exchange things or barter because John might not have wanted what Mike wanted from John. So there was like things didn't match in barter, but eventually through time, people realized that there were some commodities like cattle or grains or conches that everyone wanted, and it was much easier to do indirect exchange. So barter. It was a step up from barter. You could, and that's what money was, the most marketable commodity. And in the last few thousand years, gold and silver have been those, and they've been money, and that's why people have been using them for thousands of years. But unfortunately, government has hijacked that free market function of money. That allows people to specialize, that allows people to indirectly exchange goods and services, that allows people to, because money has to be something that's portable, something that holds its value, something that's a unit of account, something that's not consumed. And gold and silver fulfilled all those functions, but then government hijacked it through the banking system. And they tell you now that a piece of paper is money, or an entry at a bank is money. So we're far away from it. So this is the book, What Has Government Done to Our Money, by Murray Rothbard. Highly recommended. And he goes over all of this. So this is how we have to understand money. So what is inflation? Well, it's when the government hijacks the system. And how have they done that? Well, I would say that it's through crises and mostly wars. If you go back the last 200 years, when there are wars, there's always an excuse to suspend the free market and money. And what does that mean? Well, in 1914, the major European powers, they stopped banks from actually giving people their money, their gold. They call that suspending convertibility of banknotes. So, and the war was such a traumatic experience that they were able to keep this going after the war. And here we are over 100 years later using paper money, which is not really money. And how do they inflate the system? Well, they just create all these entries and these loans now out of thin air. There's nothing backing it. There's no corresponding amount of gold and silver backing it. And what that does is that it makes it easier for the statists and the bankers to create this funny money. And they get that access to that money first, and they can spend it, and they can buy valuable things. They can invest in businesses, while the general public, by the time they get that, it's become worth less and less. And that's how they basically steal from you. And my analogy for this deliberate policy of inflation would be, let's say, if myself and Rudy, and you might be asking, where's Rudy? Well, he went under the desk. He likes lying under the desk, and he looks very comfortable. Let's say Rudy is my right-hand man, and we go into a small village, and we have a lot of money, let's say gold and silver, and we take over the place. And and I pay someone to become a central bank of that village. Let's say it's Rudy's town, right? And in the beginning, we say, oh, don't worry, the central bank, you can come and put your money with us. We'll give you a receipt and so on. But after a while, you create a crisis and you say, oh, we're going to have to suspend payment of your money. You just keep using the Rudy Bank notes. And that's how it goes. And you control everyone. And that's how they do it. Can you imagine if you could do that? Start your own central bank. Make sure that the people who run things, because you've got all the money, don't disparage that central bank, and you keep printing and buying up all the properties in that town, which by now maybe has become a city. And that's how it works. And that's why it's a deliberate policy. And I've quoted someone who said that, someone that actually worked with the people that run the system back in the 1900s, and his name is Felix Sommery. He's AKA the Raven of Zurich, and you can look him up on Wikipedia and read about him. And because I'm not going to do it now, but needless to say, he was a very well-respected banker. Back in the 1900s, he advised emperors, he advised the U.S. government during the Bretton Woods agreement as well. And this is what he said. The state alone is responsible for inflation. Inflation without government, or indeed against government, is impossible. So there you go. Government inflates things. In a free market, if you're using gold and silver, indirect exchange, people will know if you're using fake coins or fake gold, and they won't deal with you. But when government is in charge, they put it into the law, into the books, and they say you will have to accept this. And that's what legal tender laws are, and that's what central banks are. Central banks and the banks around them, commercial banks, because commercial banks also issue the currency by creating loans out of thin air. That's how they put the fiat currency into circulation. And that's why I said that the bankers always win and we always lose, because the UK government's bill for Bank of England's QE losses are all related back to 2008 and what happened in 2008. Well, the bankers lent out too much of this funny money in the housing bust and the housing boom that led to the bust, and they went bankrupt. And we, the taxpayers, had to bail them out. And how did that occur? Well, the government guaranteed them. The government borrowed hundreds of billions of pounds. In the US, it was more like trillions. And what the Bank of England did is they bought government bonds that were issued to save these banks by creating this fiat currency out of thin air. And up until a couple of years ago, or a year and a half ago, these bonds were going up in value. Interest rates were going down. Everyone was okay. Bank of England actually was making profits and sending it to the Treasury. But now with rates going up, all these bonds are going down. But they're not charging the banks that we taxpayers saved. No, they're charging us again because it's going to come from our taxes. So that's why I say the bankers always win no matter what. So again, another reason to deal as little as possible with the banks. And am I saying that I would never trust a bank? No, but in the current fiat currency system with a central bank, with the government giving power to the central bank, and with the government forcing us to use their funny money through legal tender laws, I think it's a mug's game to keep too much of your hard-earned savings with them, because hopefully now you understand how the system works. And that's why inflation is the deliberate policy. Just imagine how powerful and not just wealthy you would be if you could have the Rudy Bank in Rudy's town and you controlled everything. And that's what the central bankers have done for the last few hundred years. Here in the UK, it's been happening since 1694. In the US, it's happened before 1913 when the Federal Reserve Act was passed into law, but not continuously. And that's why it's a deliberate policy. And who do you think finances all the economic departments at the major universities? And who do you think finances all the economists on Wall Street? Well, it's the people that benefit from this system. And they create this Keynesian fallacy that inflation comes out of the blue, that inflation was caused by an event. But don't be fooled. Inflation is a deliberate policy to keep extracting more and more wealth from the general public. And that's why there's so much wealth inequality in the world. And one of the reasons I've made it a mission to inform the public about it is that I saw it firsthand in a really bad way when I was growing up in Brazil. And I have to say, I was fortunate to have been in a privileged situation that I could even think about that and learn about those things. But I could see the multitudes, the majority of people in Brazil were there wasn't a middle class, and there was a very few that had everything. And this is how it's becoming. It's because of inflation, and it is a deliberate policy. So hopefully that will answer your question. So with that, let's quickly look at where the markets are this morning. And before we look at the markets, of course, we have the FOMC meeting. Well, it started yesterday. It finishes today. They're going to announce probably a rate hike from, I think, 5.25 to 5.5. And I guess the markets are going to keep a close eye on what Jay Powell says at his press conference and the statement from the FOMC. That will probably be more important than the fact that they raise rates. That's already priced in. And hopefully, by understanding what inflation really is, you understand that a lot of this is just really for show, the central banks. And what I mean by that, well, they have to make sure that they keep inflating and that they don't turn the fire too high or the temperature too high and boil all the frogs to death. And that's what they're trying to do now, to turn the temperature down. But they're never going to stop inflating. Well, they will one day when the currency collapses, but their policy is to inflate because it's what keeps their Ponzi scheme fiat currency system going. So to the markets then, it's 8:37 a.m. London time. We've got spot gold trading at 1969. It's up about $4. High's been 71 and the low 61. Silver's unchanged at 24.68. High is 74, low 54. The stock market, the Dow futures is down 8. The NASDAQ is up 4. S&P is up 5 points. So fairly quiet right now. To the currencies, sterling is down slightly at 128.90. The euro is unchanged at 110.64. The dollar is down 0.2 versus the yen at 140.67. And the dollar is up 0.25% versus the yuan at 715.16. The Aussie dollar is down a third at 67.68. The dollar is up 0.15 versus the Canadian dollar, just below 132. And the Kiwi dollar is unchanged at 62.20. To the general commodities, we're continuing to see crude move higher. And I think, yes, it's not going to be a straight line up, but longer term, I see crude a lot higher than where we're now. Right now, WTI is approaching 80. It's down slightly at 79.50. Brent is trading 83.20, down slightly as well. Platinum is trading at 970. It's down a couple of dollars. We've got high-grade copper trading at 389. That's down about 0.75%. So let's finish off with the bond market. The 2-year yield is down 2 basis points at 4.87. U.S. Treasury 2-year yield. The 10-year Treasury yield is just below 3.90 at 3.89. And now to the UK government bond market, or the gilt market. Well, we got the 2-year yield back above 5%, albeit just. It's up 4 basis points at 5.00%. The 10-year is at 4.32, up another 5 basis points. So with that, I'm going to wish you all a very good day. Take care. Bye.